Hey, what's up, everyone? Tomorrow is CPI. What is CPI? CPI stands for Consumer Price Index, and CPI is tomorrow. So I figured I'd make this video for you guys to understand what it is and what to watch out for and what to expect during CPI. And I'm going to explain CPI to you like you're 5 years old, and I'm also going to explain why traders actually care about it. Okay. Imagine we have this giant imaginary shopping basket right here, which I kind of drew to the best of my abilities. Inside the basket are a bunch of things that regular people spend money on. We have gas, transportation, medical, clothes, rent, food, bunch of the goods and services that people spend their money on. And now let's pretend that 1 year ago that basket was worth $100. Okay, $100 basket a year ago, and today the same imaginary basket now costs us $103. Same basket, same type of stuff, but now we're paying $3 more. So in our really simple example, prices have increased 3% over that year. That's inflation. Prices have gone from 100 to 103 for the same basket, 3% increase over a year. That's called inflation. And CPI is one of the main measurements we use to track how consumer prices are changing over time. Now here's something important. CPI isn't released once a year. We get a CPI report month to month. You'll hear people say month over month. And that basically means is how much did price change compared to last month. And you'll also hear people say year over year. And that means how much did price change compared to the same time 1 year ago. So in our example above, $100 to 103 is just an easy way to understand the year over year idea. So don't overcomplicate this. CPI is helping us understand what's happening with consumer prices and inflation. Now you're thinking probably, hey, Raj, what does this have to do with the NASDAQ? Who cares? But you know what? It does matter. CPI becomes really important for traders because CPI gives us information about inflation. Inflation is something the Federal Reserve pays very close attention to when making policy decisions. The Federal Reserve controls a key interest rate, and interest rates have a huge impact on the economy, borrowing, businesses, and how investors value assets. So ultimately, you can think about it as like this: CPI leads to inflation, leads to the Feds, leads to interest rates, and it ultimately goes back to the market. And that's why we care. When CPI gets released, you can sometimes see something like NASDAQ start moving extremely fast, very volatile. You'll hear people say, "Oh, the CPI came in hot," or inflation came in higher than expected, and all these things, or CPI came in cool. If someone says CPI came in cool, it basically means that inflation wasn't as strong as the market expected. If people say CPI came in hot, it basically means inflation came in higher than expected. Okay? So, imagine economists expecting inflation to come on at 3% and CPI comes out 3%. Okay, great. That's basically what everybody was expecting. But imagine everybody expects 3% and the number comes out much higher than expected. Now the market has been surprised. And when major economic data surprises the market, you can get some serious volatility. You can get very big aggressive candles. You can get very extremely fast moves. And you can get a move in one direction followed by a really quick reversal. And that brings me to probably the most important part of the video for a brand new trader is you do not have to trade CPI. Seriously, just because NASDAQ starts flying doesn't mean you have to jump into the trade. During major economic news, markets can move extremely fast. And if you're sitting here looking at your top step chart and you don't even realize CPI is about to be released, suddenly these things start going crazy. You're already blindsided and you're already behind because there will always be another setup. There will always be another trading day. Protecting your account is more important than trying to catch one giant candle. So don't get caught up in the gamble if you don't need to. And the reason I'm making this video today talking about CPI because tomorrow morning CPI does come out. So before you open up Top Step or whichever prop firm you use and start trading, make sure you know what's on the economic calendar. Always look at the economic calendar, knowing what's ahead of you. So let's bring everything back and make this stupid simple one last time. CPI stands for Consumer Price Index, as we wrote above here. Our imaginary basket that's right here with all these goods cost us $100 1 year ago, and today it costs $103. Prices have increased. CPI helps us understand how consumer prices are changing over time. It gives us information about inflation, and inflation matters to the Federal Reserve. The Feds influence interest rates, and expectations around interest rates can have a major impact on financial markets. That's why we care about CPI as traders. And that's it. That's CPI explained like you're 5 years old. And if you like this video and if you understand CPI, drop a like, drop a comment. And yeah, we'll see you guys in the next one. Much love and good luck trading tomorrow during CPI. Go slow.